biggest names, some of the biggest weights in the S&P 500. I personally am a little shocked that we're only down 1.8% on the S&P 500. It's kind of deceiving.
Yes.
What's happening in the index, looking at that. We're still up 1.9% for this year as well, Gina. I mean, this is not a very big sell-off if you pull back a little bit.
No, and it's really specific to tech and the supply chain and the risks that are embedded in AI specifically. Because I think when you look at the broader market, there are a lot of opportunities still. It's just tech sat there at 25 times earnings, sitting at this enormous premium relative to the rest of the index. The rest of the index is still trading at a normal premium compared to pre-pandemic average. You see earnings momentum building in segments such as financials, which are putting in now 15% earnings growth year over year. The consensus thought they'd only do 7 at the beginning of the year. You're seeing recovery emerge in some of the industrial space. So there are areas of opportunity that are finally starting to emerging. At the same time, you have an offset because we had so much optimism just built on the theme of AI. And we're starting to see some of that capital maybe move, or at least some new capital come into the market in seek of other opportunities that are starting to emerge.
So we have a bunch of the Mag 7 reporting, right? And I'm thinking about also Meta and Microsoft, which are both getting, they're down a couple percentage points this week. Is there news we could get out of them that would make you say, I guess it has to do with their growth, right? Whether or not those valuations are fair at this point. If we get something very upbeat, might you think a little bit differently?
To the degree that they say something like, margin expansion is likely, especially margins. I mean, I keep going back to margins because margins are so very, very
I have a note from last week, Gina, on margins.
Yeah. Sales are very important, right? You want to see continuous organic growth, but I think that's so embedded in expectations now. It's very hard to imagine that you don't have persistent sales growth coming out of these companies. Certainly today's news makes people question if you're going to have that for certain segments of tech. But margins are almost always that key trigger point for tech, because usually what happens is tech has to spend a little bit too much, or they're noticing a spend down in capital spending from somewhere else in the economy that creates margin compression for them. And that usually turns that sort of theme on its head. It's a tech-specific phenomenon that really ends up resulting in an S&P 500 phenomenon as well. So I'm watching the margin lines most carefully. If these companies are saying that they're only seeing a brighter margin future, that can change the game for tech, certainly.
Gina, when you look at one of the biggest darlings of the last couple of years lose almost a fifth of its market cap in a single day, I think a lot of folks out there might be saying, is this like a tech bubble 2.0 starting to pop?
Yeah.
Is it?
So we've been pretty prolific in the research that we've done that says this may be a tech-specific bubble, but not a tech bubble 2.0. Okay. And the difference being that the first tech bubble was really a broad equity market bubble. It was not just a tech bubble. It was an overly optimistic outlook for stocks at large. Remember, we were saying things in the 90s like, it's a new growth paradigm. Equities are the new investment class. Everybody wanted to own all stocks, no matter what the stocks were. We saw valuations for the broad market accelerate very, very rapidly. But it is pretty clear to us that at the same time, that is not the case today. Obviously, when I say things like the valuation for the rest of the index outside of tech is back at its pre-pandemic norm, that is not evidence of any kind of valuation bubble in our view. People don't want to own all equities. I think that's clear through flows, but they do desperately want to own AI and tech. It's a mini bubble inside of the equity market. Now, bubbles don't have to pop. They can continue to grow. They can also deflate slowly. So I think we also have to be careful as to what the impression of the word bubble may mean for the future. I don't want to suggest that it has to be pricked and popped and it creates this catastrophic, experience that may not necessarily be the ultimate outcome that we're due for. But it is very clear when the sector is trading at 2 times its normal valuation level relative to the S&P 500, we're pretty clearly in some sort of a bubble. Tech can also earn its way into its multiples. You could see sales and earnings accelerate faster than price, which allows for some valuation derating in the tech space. It means we lose a little bit of leadership. That seems to be where we've been headed for the last 6 months.
So is it kind of a healthy trade in that it's a very specific story impacting a very specific trade? Yeah. It's not like everything is selling off and everybody's running for the exits.
So far, so good. we're day one.
I know.
So let's see where we
It's
are.
only Monday, everybody.
But so far, if we date this back to when tech kind of fell in the broader sector rotation model that I referenced at the beginning of our conversation, if we look at the dynamics of the market since, the market has absorbed the loss of tech leadership relatively well. I would not say that investors feel tremendously confident in other themes or other sectors yet, so there is room for improvement, a dramatic improvement potentially. It really depends on how bad it gets in tech, because you can get to a point where tech is traded off so much that it's triggering losses that creates portfolio selling across the board. I don't think we're anywhere near that point yet.
But it makes all those tech earnings that we're going to get this week.
Very important.
Super, super important. Gina, thank you. As always, Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence. Her research and her team's research really a must-read for all of us when it comes to the equity trade, which is, we continue to see some selling. S&P down about 1.8%. The NASDAQ 100, a decline of about 3.5% here, Tim.
Yeah, NVIDIA down about 17.5%. It's the lowest going back to October of 2024, but worst day in more than 4 years.
Yeah, we haven't seen this in a while. We're going to continue talking, though, about that AI theme more when we come back on Business Week.
3:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got equities plummeting on concerns that a cheap AI model from Chinese startup DeepSeek could make tech valuations hard to justify. The S&P right now is down 106 at 59.94, a decline now of 1.7%. NASDAQ, the composite index, down almost 700 points, down 3.5%. Right now we have got the NASDAQ 100 index down by 3.4%. Again, to put that all in context, S&P lower by 1.7%, while the Dow is up 0.5%. 10-year 4.52%, the 2-year 4.19%, spot gold down 1.1%, 27.38 the ounce, and West Texas Intermediate crude down 2%, 73.13 for a barrel of WTI. Policymakers are expected to hold rates steady when they meet this week and have signaled they may not lower borrowing costs again for a while, at least until they see signs that inflation progress has resumed. As for the inflation backdrop and the outlook for the Fed, Oksana Aronoff is head of market strategy at J.P. Morgan Investment Management.
I think it's very possible that the Fed is going to have to take some of their cuts back this year because inflation is at best stuck at these levels right now, which means the 10-year is not priced for a higher for longer, structurally higher for longer inflation. It's still very much priced for kind of a 2% world.
Oksana Aronoff of J.P. Morgan Investment Management. Recapping, NVIDIA now down 17.8%. The S&P down 1.7%. NASDAQ down 3.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. You just heard it from Charlie. The numbers, though, worth repeating as we see this sell-off just continue. The NASDAQ composite down 3.4%. The S&P 500 down only 1.7%. I think it's fair to say.
But as you say, there's
Look
what
at
the index say. When you go internally and you look at winners and losers, basically, in the S&P 500, you have more stocks gaining ground. It's really that tech sector, and in particular, chips and the AI-related trade.
Oh, yeah. NVIDIA, Broadcom, Microsoft, Alphabet, Oracle, Tesla, and more. Suzanne Dan is CEO of Americas over at Wipro. It's a global consulting firm that provides services related to IT, cloud, and yes, AI, and that's really what we want to talk to her about, because that is why we're seeing this sell-off. Concern that a cheaper AI model from the Chinese startup DeepSeek could make valuations of these tech that has powered the bull market pretty tough to justify. It's what we spoke to Gina Martin Adams about just a minute ago. Suzanne joins us from East Brunswick, New Jersey. Suzanne, you are just back from Davos, where we know AI was front and center. Given comments that we heard from Alexander Wang, who's the founder and CEO over at Scale AI, how would you, though, characterize the AI conversation that was happening over at Davos?
Well, thank you both for having me. Everything was AI last week. You could walk down the street and every storefront had something about AI or was talking about AI. So it was front and center. This is clearly a defining year for AI and for Gen AI. And businesses are looking to figure out how do they drive value from this. Most CEOs believe that it's going to significantly change the way they do business in terms of how they create and deliver value and obtain value from the work that they do. And there was a clear momentum around, defining the strategy in which they're going to invest in AI to create that value.
Why do you think it's that they were saying, or why is it that this is going to be a defining year? Especially on a day when we kind of just got, a company that might say, hey, you don't need to do the big spend, or, we can do it. It's a different, maybe financial model in terms of the build out. I feel like we're still kind of finding our way. So why is it that 2025 is the defining way? I'm not quite sure how to read that.
Well, I think last year everybody was talking about AI and just piloting with Gen AI. It was, it's democratized. Everybody has access to it. We can use it. I think the Gen AI race is entering a new phase. We saw it this morning. And I think we're still in the beginning. To me, it really calls to everyone that this emphasizes the pace we're going to see innovation and really figuring out how we can create agile environments to deliver on AI. And at the end of the day, it's going to be about the quality of the data that these AI are trained on and deliver for our clients to really deliver value to the organizations, regardless of how much they spend. And I think where we see it is our clients really are talking about the data they need to fuel AI, whether it's a large language model or a small one.
Can you just for context, because we do speak to a lot of folks who run consulting firms or run parts of consulting firms, just give us an idea of your clients, the type of clients you have, and who's out there working with you.
Yeah, so my responsibility, I have clients across financial services, oil and gas, energy and utilities, high tech, and manufacturing and automotive. So I have clients across many different industries and many different challenges that can be solved with and without AI.
So who would you say is leveraging AI the best right now?
Well, AI is it's been around for 10 years. We've been using it in AI. And many of our financial services clients have been using AI and machine learning models for years. It's only now with Gen AI we're seeing this acceleration. And that's what's truly exciting is how we can leverage the Gen AI applications. We've been also leveraging it internally so that we can learn and then deliver those learnings to our clients. We're leveraging in HR, we're leveraging it in legal, across the board to make sure that we understand how AI can be used and understand the foundation and the governance and responsible nature in which we need to deploy it and train our people to make sure that it's successful.
So, Suzanne, what I'm wondering is, on a day like today where this story, a company that nobody had really, or I shouldn't say nobody, because our Bloomberg Intelligence team's our team overseas has been writing about DeepSeek for, the last couple of years. So it's not necessarily new to them, but certainly new to, I feel like, our conversations when it comes to AI in general. So I am curious, have you guys, your team, your phone's been ringing today to say, wait, what is this DeepSeek? And, I've been spending X on my AI infrastructure build or, making plans. Do I need to rethink it? Do I not need to spend as much, on-site versus not? Tell us about today and the conversations perhaps that you guys have all been having.
So today it's all over the news. It's absolutely correct. Everyone's talking about it. I think the reality is over time, there's going to be winners and losers. The role that we play is helping our clients make sure they have the foundations in place. One of the biggest, and I'll go back to it, is the data and the people. Training your teams to think about AI first and how to bring AI into a business to add value so it could make agents that could make autonomous decisions and be managed appropriately. The data foundation, so the models don't hallucinate. All that has to be done regardless of the technology that you choose. So that's where I think the real, area that we can add value in helping our clients navigate both the frameworks, the governance, the training of the people, all the change management and the data, all that still has to happen regardless of which model that you choose to use and the foundations you build on.
So the spend is going to still happen? Nobody's going to pull back? Yeah.
I think it'll depend on what the use case is and what the spend will be. So I think that is yet to be determined depending on the models that our clients use. And many of our clients are using large models and many of our clients are using their data and developing small models. But, I do think this is a race that is continuing and we're going to see this evolution and many more to come.
Where do you see the actual money savings happening with these companies that you work with? Is it from a customer service perspective? The whole rise of the AI agent, where will the margins be helped?
Yeah, so I think there's two things. There's the whole side of productivity and efficiency, and we're seeing that in development. Making our developers more productive and more efficient, and we're seeing it in testing of technology and applications. Absolutely, we're seeing that today. There's also things like contact center, where we're helping clients in servicing and using AI to make the agents smarter and delivering higher quality engagement. So there's lots of areas where we're seeing productivity and efficiency. And the question is, does that translate into our clients being able to add more higher value work to those or driving the costs down in their business? And we're seeing both. We launched, just as one example is Wipro Now, which is a HR intelligent agent. And we put all of our HR policies and procedures into this agent. And it's serviced over 8 million queries to date at greater than 90% accuracy. We've been able to reduce the number of HR employees to service those queries and to service those and be able to repurpose. So you can say that's a great efficiency play, but it's also a great employee experience. Our employees are able to get real-time information, real-time insights into HR and be able to have a better experience than maybe looking for documents in lots of file folders.
Well, that's what I wanted to ask you. What was the kind of satisfaction rate? As I play around, or increasingly I'm, working with chatbots to deal with customer service issues. I mean, sometimes it's really great and sometimes it's not. So I'm curious, from your internal team, how did it go? Or what you guys have learned in the process, because it's never perfect right out of the gate.
No, it isn't, and it takes time. In the early days, the quality wasn't as good as it is today, and the satisfaction is really high. I don't have the specific numbers. I know I've used it, and it has been great. The reality is, it's not the chat bots, which is based on rules. It's an intelligent agent, so it learns over time, and we all know that's the power of AI, and that's what makes it a great experience. So when something needs to be adjusted, it can be, and when there's feedback, it constantly is iterating. So it's only getting better over time and becoming that the most intelligent HR agent it can be. So I think overall it's the right direction in terms of creating a great employee experience and enabling HR to do what they should be doing and taking care of people and not just answering simple questions. And I think that makes it for a more interesting HR experience for that employee as well.
What about the administration and the role of the Trump administration in this? We saw the announcement of Stargate last week, $100 billion up to $500 billion of investment from AI companies. What was the conversation happening around this administration with regard to AI?
I'll tell you, at Davos, there was optimism around the global economy and the resilience, as well as the U.S. economy. And overall, there was interest around what we're doing around AI, as well as regulatory policies. And I think overall, there was really just great optimism in Davos around the U.S. economy.
So in terms of kind of where we go from here, you're in it, you guys are doing it at your own company, you're working with companies consulting when it comes to AI. This is year number 3, right? That this continues certainly to be an investment theme, although taking a big hit in today's session, no doubt about it. So top of mind that you think investors should be watching out for, and just got about 30, 40 seconds here.
Yeah, I see the investment in AI to continue, and I think the speculations is going to double in the next couple of years. I don't believe that has changed. Our clients are investing in AI, and I think today's announcements and what we saw today only emphasizes the importance of innovation moving at pace. And I really do believe it shows that those who invest now in bringing AI into and learning and experimenting and scaling will be the market leaders. It's going to disrupt every industry. And that's what we're encouraging our clients to do, to lean in and, power their organizations with AI. And that's why we've added, Wipro powered AI. And we really believe us being powered by AI will only help our clients be successful in implementing in their own business.
Suzanne Dan, CEO of Americas over at the global consulting firm Wipro, joining us from New Jersey this afternoon. Carol, stocks still in the red.
Yeah, exactly. You've got the S&P down about 1.8%, the NASDAQ 100 down about 3.3%.
6:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow higher, the S&P, NASDAQ. They are selling off. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are trading mixed amid investor concerns about a Chinese AI startup sending tech stocks plunging. The Dow is currently up 210 points. S&Ps are down 102, while NASDAQ is off by 3.3%. The U.S. 10-year yield is at 4.54%. Gold and oil are in the red, and Bitcoin, that's sinking by 4.7%. Among the main 11 S&P sectors, leaders were consumer staples and healthcare. Tech and utilities were under pressure, and leaders to the upside in the Dow, Salesforce and J&J, while NVIDIA plunged 18% and led to the downside. After earnings, AT&T EPS beat estimates. Those shares were up 7%. And in deal news, Emerson to buy the remainder of AspenTech for $265 a share. Wrapping things up, Crane and Nucor report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And New York Mayor Eric Adams will be having a limited public schedule over the next few days. Mayor Adams has a number of doctor's appointments and will undergo routine medical tests this week. To hear live breaking news over your Bloomberg, type SQUAWK, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody. Got about 18 minutes left in the Monday trade. You are listening and watching Bloomberg Business Week. Carol Master along with Tim Stenovic live here in our Bloomberg Interactive Broker studio. You heard Charlie and Bill Maloney breaking it down. S&P down about 1.7%. The NASDAQ 100 down the most when it comes to the index trade. We're looking at about 3.2% decline here. I am curious to see what Aaron Kennan has to say about all of this. Co-founder and CEO at Clear Harbor Asset Management. They've got about $1.5 billion in assets under management. Joining us once again from Stamford, Connecticut. Aaron, the story that we're all talking about, DeepSeek. I am curious. I know. We're trying to put it into context, because it's not like the whole market is selling off and everybody running for the exit door. So how do you think about something like this?
Yeah, thanks for having me back, Carol. I think at the end of the day, we're seeing the evolution of artificial intelligence and large language models. We're seeing what I would call sort of the gradual commoditization of artificial intelligence and, less compute power and, less GPU power, less electricity demand needed for a product that is 98% as good as the best product we have here in the United States. Is the story of the day. And obviously the hyperscalers are under a lot of pressure. As you mentioned at the break there, NVIDIA is down 17-18%, Broadcom is down 17-18%, because they were the sort of hyped up company, so to speak, that were going to be the beneficiaries of this AI demand. You have data center stocks, which are very much part of that ecosystem, down big today. You have sort of the cooling stocks that cool the data centers down big today. But then you have other parts of the technology landscape today that are interestingly doing quite well. Yeah. And they seem to be almost like the beneficiaries of this commoditization of AI, as I'm calling it, which is to say, if you remember just a month or two or even a week ago, it was how much is Facebook, how much or Meta, how much are these other companies spending on CapEx? And essentially that's to purchase the hyperscalers, the NVIDIA chips, the Broadcom chips. And now that narrative is changing. And so you have software companies like, Salesforce and Workday and ServiceNow that are huge beneficiaries of the implementation of AI into their software packages. But now they're thinking this morning, well, I guess maybe this will cost us less. And those stocks are in the green today.
Yeah, that's interesting to hear. I'm wondering if you're using this as an opportunity to buy or sell. Are you changing asset allocation at all within your portfolios?
Well, not doing a lot today, but happily, it's challenging. If you're an active manager, NVIDIA is 15% of the Russell 1000 technology index. if it's 6% of the S&P 500. So even if you're an active manager, and even if you own these names that aren't doing well today, you have to own more than if your benchmark's the S&P, you have to own more than 6% of NVIDIA in the S&P to say, well, that's a real active bet, right? So unless you're underweighted. And so, no, we feel reasonably good today. We have good broad diversification. I think there's been a lot of concentration in this market. We saw that in 2024, Tim, where if you look at the S&P 500, almost 65% of the returns last year came from 10 names, of which many are the names we're talking about right now. And, to the extent that there's a broadening out of the market advancement in 2025, if we are up on the year, we welcome that. You look at the equal weight S&P 500 today, it's only down 1/4% today. It's quite telling.
So, forgive me, are you buying? Would you be buying an NVIDIA? Would you buy a Broadcom because they've all of a sudden been whacked in a big way? If you still believe in them fundamentally, and I'm not sure if you do, or I'm just curious.
Yeah, we believe in growth opportunities within the technology segment. We would also argue that there has been a significant amount of passive dollars flooding into these names, driving them. If you look at the top 7 names of the S&P 500, they're trading over 30 times forward multiples. You look at the bottom 493 names, they're trading at 17 times. So
right.
Do we think they're quality companies? Yes. Do we think that some of them are not trading at necessarily the most attractive price point? Yes. And we think we can be in the affirmative on both. But we do think, too, that doesn't necessarily mean over the long run that dollars are going to be accruing significantly away from these hyperscalers. But there's broad opportunity across technology. Even the utility landscape today was quite interesting, where this whole narrative around electricity demand, we've been hearing it for weeks and months. Look at Constellation Energy today.
Yeah.
That's the deal that Microsoft did, right? 3 Mile Island. That's down 20% today.
Right.
Look at Vistra Corp.
Down 30% today. Look at the water utilities today that no one wanted to talk about last year. They're up 5, 6, 7% today. So it's really interesting, this rotation we're seeing.
So interesting rotation. Is it an investable interesting rotation?
Well, I mean, just look at multiples. I mean, we haven't permitted a nuclear build out since the 1970s. The market's acting as though we're going to have a dozen nuclear build outs contracted in 2025. It seems highly unlikely. I mean, we do think that we're going to have less regulation, but even the announcement at the White House last week was quite interesting, where if you looked at the $100 billion spend a year for 4 years, actually more than that, it's $500 billion over 4 years that was announced to build out AI infrastructure. That timing looks a little off right now, but to build out AI infrastructure, the amount of electricity demand for those data centers would be about 1.7 gigawatts per year based on the dollar spend that they're talking about. That's about it's 2.7, excuse me. That's almost 3 nuclear power plants a year just for that project. So that we were getting, I think, over our skis in the marketplace to some extent.
Aaron, how much
over a short time?
Okay, if we were getting over our skis now, to continue the metaphor, where are we on the slope?
Well, I think there are plenty of opportunities in the market. As I mentioned, if you look at forward multiples outside of this sort of, hyper-focused area of technology, we've even in utilities, as I mentioned, the water utilities they have nice ROE growth. They're trading at reasonable multiples. You look at the industrial segment of the market, we're seeing a lot of opportunity across the board there. If you look at certain segments of the financials, we think M&A activity is going to accelerate this year. Private equity funds have, in many cases, reached the end of their life in terms of the limited partnership duration of 10 years or more. And so we think that these companies are going to need to be either brought into the public market or sold back into the private market this year. Huge opportunities for banks, advisory firms, companies that work on valuations of private equity.
Okay.
So, plenty of opportunity there, too.
All right. Aaron, thanks so much. Aaron Kennan, he is co-founder and CEO at Clear Harbor Asset Management, joining us from Stamford, Connecticut. Folks, about 10 minutes to go until we wrap up this Monday trade. We're continuing to see, though, losses in tech names.
is Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody. You are listening and watching, of course, Bloomberg Business Week. Carol Massar, Tim Stenovec, live here on radio, YouTube, and, of course, Bloomberg Originals. Just a moment, we're going to head over to our TV colleagues. We'll count you down to the close on this Monday. It's been an interesting day. I think safe to say unexpected in terms of the story that has dominated our conversation. All has to do with DeepSeek, this, different, or AI company that may
ChatGPT competitor,
be a challenger, right? And may make you rethink about maybe what the cost is involved in terms of the AI build out. I feel like it just puts out a lot of questions to the AI trade that we've all been talking about for the last 2 years.
Yeah.
Energy usage too.
We got a great
perhaps.
sort of wrap up. It's one of the most read on the Bloomberg terminal in the last 8 hours by Lynn Duan and Rivaldo Gigantes. It's about talk of the AI upstart in China behind that ChatGPT rival has been building for days. They mentioned at the World Economic Forum in Davos last week, some mentioned that DeepSeek and its recently released R1 model as a prime reason for countries such as the US to be doubling down on AI investments. On tech chat boards, engineers had begun comparing its programming performance to leading models from the likes of OpenAI and Microsoft. Its product quietly rose through the ranks of top performers on that UC Berkeley affiliated AI leaderboard.
Yeah, it's really fascinating. Actually, CNBC out on Friday had a story, and there was it quoted Microsoft Satya Nadella at the World Economic Forum in Davos, Switzerland last week. And he said to see the DeepSeek new model, it's super impressive in terms of both how they have really effectively done an open source model that does this inference time compute and is super compute efficient. He said, we should take the developments out of China very, very seriously. Again, that's Microsoft CEO Satya Nadella in a story out by CNBC. But it's interesting, within the past 36 hours, you've seen all these heavyweights in the tech community really weighing in. Silicon Valley heavyweights, including investor Mark Andreessen and AI godfather-in-chief Meta platform scientist Jan LeCun, began piling into the conversation, with Andreessen calling DeepSeek's model, quote, one of the most amazing and impressive breakthroughs, end quote, that he's ever seen.
I was lurking on Twitter before I went to bed last night, and I saw some screenshots that people had taken of the Apple iPhone App Store.
Yeah.
Showing that it was among the top apps downloaded on the store. Also Google's Play Store as well. It actually strained the startup system so much that the service went down for more than an hour. The company was eventually forced to limit signups to those with mainland China telephone numbers, but claimed that the move was the result of, quote, large-scale malicious attacks on its services.
Yeah, I mean, it's kind of fascinating just how the shift in the conversation. I think many folks would say, well, hold on, first of all, in terms of the market impact, it's not like the whole market is selling off. We have seen a kick up in the VIX, but again, I think around 19 or so, which is above where we've seen it as of late, but it's not like it's hitting a 40 level or something significant that we've seen in past market turmoils or crises. And I think there's a lot of questions that have to be known or answered at this point. And I think the other thing is another Chinese company that will there be restrictions over from the U.S. government in terms of American access and U.S. access. So things to be known, and things to be answered.
I mean, NVIDIA dismissed some of those concerns in a statement. The company said that this new model is an excellent AI investment and it complies with U.S. tech export controls.
Yeah, which is fascinating.
Yeah, I mean, NVIDIA weighing in with this day where its shares are down, what, at 1.18%?
Yeah, and I guess I want to know what went into the model, what chips, what technology, how are they doing it, right?
17% now, yeah.
You want to kind of know and understand how it's all happening. So, yeah, I guess we'll have to wait to see. I can safe to say that this will continue to be a topic as our team and all teams around the world just kind of dig into this story to try and understand how this shifts the AI conversation potentially, and certainly the investment plays that we've seen.
It's a remarkable trade today. Wonder if it's the start of something bigger.
Yeah, I don't know. We've got a Fed meeting
is the
too.
blip.
I think, Jay Powell and company could potentially say something on the economy, on inflation, on interest rate moves, up, down. We don't know. But anyway, that's something else. And we've got some big tech earnings, so there's a lot coming at us. Hey, right now coming at you is our TV colleagues and us. We're going to count you down to the close. The closing bell starts right now.
Break down all of today's market action with our global simulcast starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele, taking you through that closing bell. A global simulcast starts right now with all of us. Yeah, you just saw it. Scarlett Fu in the TV studio, Carol Masser and Tim Stenovic in the radio booth. I would call this a historic record day, Carol Masser, but the NASDAQ 100 down 3%, worst day since December.
Okay, yeah. I mean, a little perspective, right? Isn't that what we do really well, is put it into perspective? I mean, I keep looking at the major equity averages. I mean, you still have almost 350 names in the S&P 500 that are actually up today. Even the NASDAQ 100, more names are up than down. So I just think it's very targeted, it's very specific, and I think there's a lot of questions about what this news really means in terms of the AI investment play going forward.
Well, if you want to see where things are getting hit, one of the areas is the stocks, down more than 9% right now. 27 of the 30 stocks that are in the stocks are lower today. Yes, including Broadcom, NVIDIA, and Marvell, which are all down double digits.
Yeah, but doesn't this make the earnings calls that we're going to get later on this week a lot more interesting?
Yeah.
Especially with Meta pre-announcing how much it's going to spend on CapEx. You're going to have a lot more interested people listening for hundreds of billions of dollars and whether that still makes sense.
I know. Usually I just kind of wait to read the transcripts, but I'm going to get on these calls now.
We're going to get excited. I do want to point out, though, guys, that commodities are still getting hit pretty much across the board. That feels like you sell what you can, not what you want things. So I appreciate that in the equity market, maybe we're sort of like it's just a tech story, but the follow-through selling there is something.
Well, I'm glad you brought up commodities, too. We kind of forget all the other news flow. Apparently, we were at war with Colombia or something over the weekend.
Like 24-hour
which sent
trade war,
coffee prices up and sent soybeans and other down. And then, of course, some bad data out of China here. Nevertheless, let's just say this could have been a lot worse, folks. We're going to start with the S&P 500 as we get the closing bells. The S&P is still holding that 6,000 level. It is down, though, almost 90 points on the day, or about 1.4%. The NASDAQ composite is down more than 600 points, or 3%. The NASDAQ 100 also roughly down about 646 points, or 3%. If you're looking for a bright spot, there are a couple places you're going to find it. The Dow Jones Industrial Average up 289 points, or roughly about 0.6%. Dow Transports up 242 points, or about 1.5%. And you see the Russell 2000 on the left of your screen there. That did finish the day down by about 1%, but I challenge you, pull it up on your Bloomberg terminal and see what rose and what fell, and you'll get a better sense of market sentiment.
Yeah, so perfect setup going back to the S&P 500, 351 names to the upside in the Monday trade, 152 to the downside. And Scarlett, if you look at the NASDAQ 100, 55 names higher, 46 lower.
Yeah, but there are some big swings in the sectors that mattered here. And let's start with the obvious, which is tech. And it's the biggest slice of the pie, of course, because it's the heaviest weighted sector in the S&P 500. That group losing more than 5.5%. Utilities, as Alex mentioned, down by more than 2%. That, of course, they're the second derivative play of the AI story. But you look at the big gainers here, and your traditional defensive sectors like consumer staples and healthcare. Lori Calvasina of RBC just mentioned financials as a safe haven as well. Each of those group gaining at least 1%.
All right, let's get to some of the individual gainers. Apple, check it out, folks. Reporting on Thursday, outperforming the broader trade in a big way, up about 3.25%. It's the number 4 gainer in the NASDAQ 100 today against that broader sell-off of the NASDAQ 100 and against its own recent weakness. Keep in mind that this one's been under pressure. Apple's down about 10% since late December. Our team noting that while Apple is expected to be a long-term beneficiary of artificial intelligence, especially as its millions of users access AI services through the iPhone and other hardware, it hasn't been devoting billions of dollars to AI capex the way other mega caps have. So maybe a little bit of a rethink, but definitely an outperformer. I want to go to the ADRs of Aurora Mobile. It's a micro cap, small company, $115 million market cap of those ADRs that trade here in the United States. It's a Chinese software and application company, up 141% after it said its enterprise AI platform has incorporated the DeepSeek R1 large language model. So kind of on the coattails of all that news that we got about DeepSeek in today's session. And then just for something different, Vail Resorts, finishing off its highs, but still a gain of about 5.5%. This company was issued a letter from its shareholder, Late Apex Partners, calling the company's performance unacceptable, and says Vail must replace both its CEO and its CFO, reset its board of directors, and cut its dividend by 80%. So that one saw a fair amount of activity.
Can I just also add, AT&T
I know.
Isn't that amazing?
Yeah, I mean, best day in more than a year on the back of, I guess, what were some pretty decent earnings,
It
Carol.
was a very different trade today.
And a little safety play there.
Yeah, exactly.
All right, let's go to what everybody wants to talk about. Shares of NVIDIA today, the biggest decline, I should say, going back to March of 2020. It erased a record amount of stock market value, $589 billion in value. Shares down about 17%. The sell-off today fueled by investor concern around the Chinese AI startup DeepSeek. The latest AI model of DeepSeek that was released last week, it's widely seen as competitive with those from OpenAI and Meta platforms. Apple, for what it's worth, now back to the world's most valuable company after today's decline. NVIDIA coming out and saying that DeepSeek is, quote, an excellent AI advancement that complies with U.S. technology export controls. We also saw other companies in the space fall as a result of this news. Broadcom down 17.4% today. It's a key ingredient, of course, in the companies that are designing their own chips. So think Amazon, think Alphabet. So if there's perhaps less need for those, then Broadcom is affected. Once again, shares of Broadcom down double digits today by 17.4%. And finally, the worst performing stock in the S&P 500 today, Vistra Corp, down 28%. Because if you have less of a need for those hyperscale facilities, then you have less of a need for power. And that's why independent power producers got absolutely crushed today. It was actually the best performer in the S&P 500 last year, up more than 260%, but down today by more than 28%.
Yeah, Romaine and I were talking about that earlier, like baby with the bathwater. Like, is that what we're looking at here when it comes to all those derivative plays? Looking at the bond market, it's been a solid bid the whole day across the curve, yet yields are off the lows of the session. Just taking a look, say, at the 10-year, yields ending down by about 9 basis points. At one point, they were off by about 13 basis points. We also got a 2- and a 5-year auction. They were fine. Tomorrow, we get the 7-year auction, so watch that as well. The 5-year did pretty well today.
All right, I had mentioned earlier that this is a big week in terms of tech earnings. Which one are you guys looking forward to the most? Because it feels like Meta kind of front run their whole CapEx spending. We already know what the number is going to be, but now the onus is on Microsoft whether they do anything.
Okay, so on Meta platforms real quick, I was surprised to see the stock reaction to this announcement late last week, because normally when you see a CapEx announcement go higher, you know, the stock gets hit, but investors were bullish on this. And we also saw Meta platforms, you know, at one point it was down today, later in the day it was higher. Investors not selling off the stock today as a result of what we saw from DeepSeek. Do they come out? I mean, Mark Zuckerberg knew about this last week, even with the announcement of increased CapEx spend. Do we see any of these companies pull back?
Well, that's what I'm curious about. I mean, I guess the short answer would seem to be probably no. And I thought you brought up a good point, is a lot of people were talking about this idea that there's no way that these tech CEOs and the other folks beneath them weren't already aware of what DeepSeek was capable of. Like I said, this kind of dates back to late December and then, of course, back to January 9th. As far as what I'm most interested in, to answer Scarlett's question, I kind of want to hear what Apple has to say. Because they were kind of the laggards in this, right? They were the ones everybody said, well, they're behind the curve. Why aren't they spending more money? Why aren't they articulating more of a AI strategy? And I don't know. I kind of feel like, for a variety of reasons, maybe it's kind of better that they didn't.
Well, maybe, but also they just hired a new head of AI, right? So interesting to see sort of the read-through on that. But to your point about CapEx spend, so it feels like 2026 is now what we care about in terms of CapEx spend for these companies. Remember, for Meta in particular, they have Meta Llama, which is open source, right? So something that's open source that's doing really well, it's easily adopted, should be good then a read-through for Meta.
Well, that's the thing that's interesting, right? That if this ultimately is true, and there's still a lot of questions in terms of, you know, their developments, DeepSeek and what they found out, and the cost side of that equation. But if it is a lot cheaper, anybody who's been doing the spend, and I will want to know from Meta that, like, do you rethink your spend? That if it's not, you're not going to have to spend the $65 billion. So I do think that it could be a plus for the likes of Meta and Apple, that when they ultimately do, it's going to be a lot cheaper on their CapEx line.
There's also a big question mark about how Washington responds or whether it responds, because clearly the export controls may have been working, but China was able to get around that and use the lower end chips from NVIDIA to create all of this.
So that should be a concern to NVIDIA, right?
Yeah.
That its most recent highest end chip wasn't the one necessary to make a product such as this.
Yeah, and I'm also on that same front, though. I also am curious to hear, too. We're going to get some earnings out of the car makers. I think GM, of course, Tesla as well. And we also talk about some of these chips and just the technology, the AI technology being used, of course, with autonomous and assisted driving and other things like that. So we could actually get some interesting commentary out of those companies as well.
It's only Monday, guys. Unbelievable.
Is it? Are you sure?
It is only Monday.
Yeah.
Sorry. All right, guys.
But it's not bad. It's going to be exciting tomorrow, unless you have to go to a municipal bond conference.
Which I'm looking forward to from 10 to 12. So listen in on radio.
Okay, we will. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals, folks. We call it the closing bell. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is a Bloomberg Business Week. That is Carol Masser. I'm Tim Stenivek. We're going to continue our conversation about NVIDIA's plunge today. NVIDIA erased $589 billion in value. It was the most in market history. Carol, it was the worst day going back to March of 2020 for NVIDIA.
Yeah, it's pretty rough.
That's a lot of money gone.
Yeah. If you were all in, if you were leveraged to the upside, that hurt today.
Yeah, Jensen's net worth at one point today was down about $13 billion.
Yeah, that's like, hey, honey, how was your day today? Not so good.
I think he's okay.
Yeah,
Still got that NVIDIA tattoo and the leather jackets. He's cool.
I'm curious if investors were pulling money out of things, and that's what our next guest gets to.
Yeah, Evan Faguns is watching this closely. He's portfolio manager and senior equity analyst at TCW, where he co-manages the TCW Global Artificial Intelligence Strategy. NVIDIA is the largest holding in the fund. Evan joins us from Los Angeles. Evan, good to have you with us. Just give us an idea of how you watch a day like this as the co-portfolio manager of this AI strategy. Do you sell? Do you buy? Do you sit on your hands? What do you do?
Yeah, absolutely. Well, thanks for having me first off. And, obviously today was a tough day. And I think it really hit on, one of the bear theses of the AI trade that's really played out over the past 2 years, that all of this investment by the hyperscalers and all the capital expenditures, wasn't necessary, and there'd be a breakthrough in the way that the models were architected, and, it wouldn't be as expensive to continue to see the technology to progress. But I think, I think that last part is very key. The technology needs to continue to progress. The models aren't good enough yet for so many use cases. I'm sure most people have used, generative AI and seen some hallucinations, and they need to continue to get better. And, I think DeepSeek's model, even though it brought down prices, it didn't actually push out the capabilities frontier. So I think that's important to note. And I think that models need to continue to get better.
But pricing's a big one, right, Evan? Like, I'm curious. I mean, this is your world. And NVIDIA is, as Tim mentioned, largest holding in the fund. Meta's in there, Amazon, Alphabet, Microsoft. Some of these we're going to start hearing, right, in terms of earnings. But, I mean, is there any kind of major rethink, when it comes to the news that we got over the last few days? And really, it started coming out of Davos last week, where some kind of a who's who in the tech world of publicly held companies and investors are being like, yeah, we need to kind of notice what these guys are doing.
Yeah, I mean, I think it's very important, but it's also, the price for a given level of performance for an AI model, it does come down. If you think about GPT-4o Mini, the price per token is down about 99% from the original GPT-4 for pretty similar performance. So once you get to a certain level, yeah, we always expected that the cost will come down pretty quickly, but we think, those savings will, they'll keep on going up and keep on pursuing performance rather than costs. We think that's still more important at this stage of the AI build out.
So today with NVIDIA down more than 17%, it is a buying opportunity. Do you add to your position? That was a question, by the way. Is it a buying opportunity?
Yeah.
Do you add to your position?
Yeah,
today?
I know. I certainly think it's a buying opportunity. And I also think, it's not just the hardware players, but it's also the software players, because, the price coming down does mean that it's cheaper for people to run these models. So I think you did see some of that, but I think, that will continue. And then the ones that got punished today, there's also a buying opportunity there, because it's not just software scaling and the way that these models are architected, but you still need the hardware side and continue to scale with computing power.
Does your strategy for the TCW artificial intelligence strategy change at all?
No, I don't think so. I think this is still a very long-term trend. And I think we always expected, cost for a given level of performance to come down. And I think, that's proving it out. And I actually think if you think about the AI ecosystem as a whole, I think, after, the past week or two, we actually would expect more AI to be used, say 5 years from now than we did, a month or so ago. So it's, I think it's a breakthrough that's potentially, bullish for the overall ecosystem.
Is it safe to say, though, maybe the AI darlings of today might not be the AI darlings, 4 or 5 years from now? Is it possible?
I think, in such a rapidly moving area like AI, it's always going to be product leaders and technology leaders that take it, and those absolutely do change from time to time. I do think NVIDIA will be one of them, to get to your question on whether we're adding, because, it's just hard to replace that for model training and really cutting edge and pushing that frontier.
Remember, Intel was once the one to beat many moons ago.
That is true. That is true.
No, but go ahead, finish your thought.
We're not seeing anything that would make us think that NVIDIA is going the way of the Intel. I think they're still so clearly the leader in accelerated computing. And we just think that it really pays to be, pushing the boundary in AI right now, because there's still so much untapped potential. There's still so many use cases that have yet to be unlocked by more powerful models. So I don't think that opportunity has disappeared just because, the O1 level of compute has gotten gotten cheaper.
Pat Gelsinger of Intel, you mentioned Intel, Carol. He's out with a tweet, and look, you got to be careful with this stuff these days, because like anybody can have a blue check mark when it comes to this stuff. But this is a Twitter account that looks to be Pat Gelsinger's. He says, it's a long tweet, but I'll read some of it. Open wins. DeepSeek will help reset the increasingly closed world of foundational AI model work. Thank you, DeepSeek team. He says that wisdom is learning the lessons we thought we already knew. DeepSeek reminds us of 3 important learnings from computing history, and that third one is the one I read. What do you think of him thanking the DeepSeek team here?
Yeah, I certainly think what they've done is very interesting. They tried a few different things and how they've trained them all. They've really taken a differentiated approach. Obviously, the open source is a big one. Llama was the only major model that was also taking that approach. They did some things like changing the way the model was trained. They skipped some of the supervised fine-tuning aspects of it. So they definitely brought some innovation on the software side to it. So I think there's a lot to admire about what they've accomplished with, pretty bare bones budget. But I think it really just bodes well for, again, just bringing down the price and increasing adoption of AI overall. I think it's very healthy for the ecosystem for, this kind of innovation. It's really exciting.
And by the way, if I wasn't clear, Pat Gelsinger, former CEO of Intel, so.
Right, but knows a thing or two about the semi world, to say at least. Well, Evan, I think this is what we're trying to be really smart here at Bloomberg in terms of the folks we are talking to in our reporting, is kind of put it in context. This is one day. We'll see what happens tomorrow in terms of the trade. But it is certainly something that all of a sudden now the AI conversation is going to include this company. And all the CEOs on the earnings call are going to be asked about it. Again, in terms of the AI investment rethink, is there a major change in the narrative? Is there a major change in the investment play? Or you're waiting for what? If there is going to be a change. Yeah.
I think that you brought up a good point, and I do think the next week or two with some of these hyperscaler earnings reports are going to be crucial for where it goes. I think you guys mentioned just before I came on about how Meta just announced their increased CapEx guidance. It's hard to imagine that they would back off of that so soon after. We'll also hear from Amazon and Microsoft and Google. And I think they'll continue to say that they're full steam ahead on investing and pushing the envelope and unlocking new use cases. So I think it's actually pretty fortunate, the timing of when this came out for the stock market, because we'll hear from a lot of the titans in the industry very soon, right. and hopefully they'll double down on these investment plans.
All right, we're going to double down and ask you one more time. So are you going to buy NVIDIA today? Have you been buying NVIDIA today? Just got about 20 seconds.
We're going to buy more of these AI enablers, which includes everything that goes into the AI ecosystem, includes NVIDIA and some of the other computers.
Yeah, because they're on sale today. I'm just going to say.
Hey,
and if you believe the fundamental long-term story, right? They're cheaper than they were on Friday. or Thursday.
Absolutely.
All right, we're going to leave it there. Hey, Evan, nice to get some time with you. Really appreciate it. Evan Fagans, he is portfolio manager and senior equity analyst over at TCW. He co-manages the TCW Global Artificial Intelligence Strategy. Yeah, I'm looking at it. TCW, ARTIF.
Hey, Carol.
On the Bloomberg.
Up next, the billionaires. They've descended on Washington. The question, what do they want
What do you
in
want?
return?
What do you want?
That's next.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. A rough start to the new trading week, and this Bloomberg Business Flash is brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. The Dow higher up 289 points, closing at just about the best level of the day today, up by 0.6%, but a very different story for the S&P 500 index and NASDAQ. Stocks sold off on concern that a cheap artificial intelligence model from Chinese startup DeepSeek could make valuations of the technology that has powered the bull market tough. The S&P today was down 1.5%, down 89 points. NASDAQ was down 612, a drop there of 3.1%, while we had the NASDAQ 100 index down by 3%. 10-year, 4.53%, the 2-year, 4.19%. Again, the S&P down 1.5%, NASDAQ down 3.1%. Gold down 1%, 27.43 the ounce. West Texas Intermediate crude down 2.1%, 73.10 a barrel on WTI. Bitcoin now the very volatile session, now down 2.5%, back above $100,000, closing in on 102,000 as a matter of fact. Right now we have got Bitcoin again down by 2.5%. Briefly, in the economy, sales of new U.S. homes ended 2024 on a high note in December as customers took advantage of incentives from builders, leading to a second straight year of increased purchases. And New York City Mayor Eric Adams will have limited public appearances and a limited schedule this week. A spokesperson says he has a number of doctor's appointments and will undergo routine medical tests this week. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much, Charlie. Do appreciate it. It's time now to look at the billionaires within Trump's orbit. You don't have to look that far to see some of them last week, Carol. Leaders including
Front
Elon
and
Musk, Jeff Bezos, Mark Zuckerberg, Tim Cook, Sundar Pichai, Xiaozi Chu, who's the CEO of TikTok, attending the inauguration. Not all of them are billionaires. The majority are, though.
No, they're doing pretty well.
I looked it up. The majority of those names are billionaires.
Yeah, there's a lot there.
Many of them are, of course. A lot of questions around those wealthy folks, including what do they want in return? And then, of course, there's Elon Musk, who one law professor says has been given, quote, the keys to the candy store.
All right, so a lot to talk about. Let's talk about money and power with Emily Birnbaum. She's lobbying and legal affairs reporter for Bloomberg News. She's got a great story out. So does Gregory Cordy, who's senior White House and politics correspondent for Bloomberg News, each of them joining us from our Washington, D.C. bureau. Gregory, we do want to start with you, though, and Elon Musk. This was something actually I was reading in over the weekend as well. I keep thinking about Elon Musk, who runs this incredible empire, right? Has big government contracts. And I just keep thinking, what kind of information is he able to access in the government? So walk us through a little bit of what you wrote about and kind of what came to light.
Yeah, so we've been waiting for President Trump to put some meat on the bone of this Doge idea that he floated after the election. He was going to put Elon Musk and Vivek Ramaswamy in charge of this Department of Government Efficiency. It's not a department, but we learned when he signed the executive order that it is going to be an office within OMB. He's rebranded the U.S. Digital Service as the U.S. Doge Service. He's put Elon Musk in charge of it. And the mission, though, is going to be a little bit smaller than we were initially led to believe. It's going to look at modernizing federal government IT, which is a huge enough task in and of itself, but the things that Musk wanted to look at in terms of cutting government spending and cutting government regulation, they're not in this quite yet. But still, that modernizing IT mission would give Musk access to vast troves of information about federal IT contracting. And even though he's not directly in that space, some of his competitors are. I mean, think about Jeff Bezos, owns Blue Origin, which competes with Elon Musk's SpaceX, and Amazon is a major cloud computing provider for the federal government. So this is something that where all of the intertwined business relationships that Musk has, we still sort of need to make sure that he's sort of coloring within the lines of the federal conflicts of interest law.
So what would somebody typically within the government have to do to their assets in order to serve in that government role? We saw a great story last week from our colleagues about what Howard Lutnick plans to do with his assets if he is confirmed in his position as head of commerce. What does someone typically have to do?
Yeah, you would either put them in a blind trust or you would divest completely from them. And that has certain tax advantages because there's a loophole to the capital gains tax that says if you are forced to divest because you enter federal service, you can basically put that, you can change the basis to the what you get for it and therefore avoid capital gains tax altogether. Obviously, Elon Musk is the richest man in the world. He has a vast business empire that he is not going to get rid of. And this arrangement that Trump set up in setting up Doge allows Musk to do that. So he will be what's called a special government employee, most likely. And that means he has to disclose what his assets are, but those disclosures are not going to be public, and he will not have to divest. So he can come in temporarily, do his job, and leave, and not be subject to the same sort of ethics divestiture and disclosure that other federal employees would be subject to.
Well, speaking of others, other tech billionaires, they want what Elon's having. Let's get into that story. Emily, that brings us to what you have written, and it's out on the Bloomberg today. I mean, all of these tech billionaires, Jeff Bezos, Mark Zuckerberg, Sundar Pichai, Tim Cook, they were all, and others, were front and center at the inauguration. In fact, they were sitting among, the nominees for his cabinet. Are they just like, man, this is so unfair? Or, I want what Elon wants. What do they want out of this administration? Because they obviously, spent some money for the inauguration for Donald Trump.
Yeah, they each have hundreds of billions of dollars on the line in the second Trump administration, and they are going where the political winds are taking them, which is they see Elon with this close relationship with Trump. They see this openness from Trump to develop relationships with the tech CEOs, and they're taking full advantage. Amazon is facing an antitrust investigation that they would rather settle out of court. Google is facing 2 antitrust cases from the Justice Department. They are locked in a race to dominate AI. They would like to shape AI regulations. The list goes on, but essentially they all see how much they stand to benefit from having Trump's ear. Whether Trump will do what they ask him to do is yet to be seen, but it's a pretty good investment. They each gave, about $1 million to the Trump inauguration, besides Elon Musk, who gave a lot more. But it's only the beginning of this relationship.
Okay, so Emily, let's talk about some of these names in particular. Tim Cook is one that isn't necessarily one that's as outspoken as some of the others. We've seen what Mark Zuckerberg has done, where he stood during the inauguration. Of course, Elon Musk, of course, Bezos. What is Tim Cook? What did he give? What did he get? And what does he want?
So he gave personally $1 million to Trump's inauguration.
That's an important distinction, right? Because everybody else, I think it was corporate donations, correct?
Yes, it's sort of important, and it's sort of not, because Apple doesn't have a PAC, so they couldn't give from Apple's PAC. But it is an important distinction. Tim Cook himself has been Apple's lobbyist in chief pretty effectively. He did it during the Biden administration, and he did it during the first Trump administration. He successfully convinced Trump to give Apple some tariff exemptions. So Trump is coming in hot on the trade war with China, and Apple really needs to ensure that it protects its supply chain from some of these tariffs. There's an estimation from Bloomberg Intelligence that 80% of Apple's iPhones are still made in China. And so Tim Cook is really doing his job as the CEO of this highly valuable company. And he is investing in this relationship with Trump again. So he actually has a history of friendly relations with Trump, unlike Mark Zuckerberg. So he's just going to continue to try to leverage that.
God, it's fascinating. Gregory, I want to bring you back into it. There's a great quote in your story by Kathleen Clark, who's a law professor at Washington University of St. Louis, who studies government ethics. And she says, with Elon being in the administration, essentially, Trump has handed Musk, the biggest donor to the effort to elect him president, quote, the keys to the candy store. I mean, again, I go back to the types of information that he's going to have access, or even if it maybe shouldn't have access, but is there expectations that the president might look the other way if Elon requests something?
Well, remember what the whole plan of attack is here with Doge, and that is that Musk this sort of relates to the AI story that we've been talking about all day, right? Musk wants to train AI models on this trove of federal contracting data, spending data, to see where he might be able to root out inefficiencies. And so by putting all that into, say, Grok, which is the AI component that's built into X, his social social media platform, that's going to be the preferred tool. He's asking in interviews with these software engineers, what is your experience with Grok? And so we're on uncharted territory here in terms of how do we protect that very sensitive data. It's not classified data, but there could be trade secrets in this procurement data. There could be information about what other companies are bidding. And if you train an AI model on that, how do you segment that from the sort of the public AI model that Grok is using in everyday use on X.com? And so these are really sort of thorny issues to sort out, and we're just on the precipice of this AI revolution, how it's going to change all of our lives, but especially even the federal government.
Okay, well, let's stick with technology and the federal government. And I do want to go back to you, Emily, and talk a little bit about Xiaozi Chu, the Singaporean businessman who is the CEO of TikTok, and seeing him at the inauguration and how he is now physically, at least last week, got close to President Trump. What does he represent when it comes to the future of TikTok and what TikTok may get?
So Trump has done such a dramatic turn on TikTok. So he was the first one to ban TikTok during his first administration. It didn't work, got caught up in the courts, and now he has made it his mission to undo the ban that that Congress started and the Biden administration signed into law. And him bringing the TikTok CEO up there, putting him on the platform, was him showing his young base, I'm going to save this app for you. You know, he said himself, he's seen data that shows his young supporters are on TikTok. He wants to, be the hero in this story. So right now, the White House is acting almost like an investment bank, bringing together investors to try to, according to Trump, buy 50% of TikTok in order to keep the app in the United States. So I think the CEO being there is just another signal that Trump really wants to save TikTok.
Well, it's going to be fascinating to watch how all this plays out. Elon Musk there as part of the administration, right? He's a government worker, and then these other tech billionaires.
Make $200,000 a year if he takes a salary.
That's it?
Yeah.
Oh, okay.
It's the maximum he can make.
What if he gets an expense account? Just saying, just asking. Our thanks to Emily Birnbaum, lobbying and legal affairs reporter at Bloomberg News in D.C., along with Gregory Cordy, senior White House and politics correspondent for Bloomberg News. This is Bloomberg Business Week.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Steep losses for the S&P and NASDAQ to begin the new trading week. Stocks sold off on concern that a cheap AI model from Chinese startup DeepSeek could make valuations of the technology that has powered the bull market tough to justify. S&P 500 index today down 89 points, a drop of 1.5%. The Dow higher by 289, up 0.7%, but NASDAQ down 612, a drop today of 3.1%, while the NASDAQ 100 index was down by 3%. 10-year at 4.53%, the 2-year 4.19%, gold down 1%, 27.42 the ounce, and West Texas Intermediate crude down 2.1%, 73.09 a barrel. Bitcoin now at 101,280. Bitcoin today down 3.1%. As for the AI backdrop, Aaron Kennan is the CEO and co-founder of Clear Harbor Asset Management, and he was a guest right here on Bloomberg Business Week.
We're seeing what I would call sort of the gradual commoditization of artificial intelligence, and less compute power, and less GPU power, less electricity demand needed for a product that is 98% as good as the best product we have here in the United States is the story of the day.
And indeed, the story of the day, the sell-off in NVIDIA. The stock plunged today by 17%. We get earnings this week from Meta Platforms. Meta today up by 1.9%. Also reporting this week, Apple up 3.2%. Tesla today, which also reports this week, down by 2.3%. New York Mayor Eric Adams will be having a number of doctor's appointments and undergoing routine medical tests this week now, according to an emailed statement from the New York City Deputy Mayor for Communications, Fabian Levy. He says Adams will have a limited public schedule over the next few days. Again, recapping, S&P lower by 89 today, down 1.5%. NVIDIA, worth repeating, down 17%. 10-year, 4.53%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, Southern California will clock a few more hours as showers continue to soak the burn-scarred landscape around Los Angeles, depending on where you are. The rain certainly, though, helping fight those wildfires that have killed at least 28 and destroyed more than 16,000 structures. They also, though, raise the risk of deadly landslide and debris flows that can overwhelm a house with mud in just seconds. A short section of the Pacific Coast Highway west of Topanga Canyon Boulevard was shut due to mudslides, and 4 vehicles had to be pulled out near Woodland Hills on Saturday. Carol, this is how it plays out in Southern California. In California, I mean, the vegetation gets destroyed by a fire, then the rains come, and the mudslides are destructive as well.
Right, there's nothing to hold, dirt back, the land back.
Dr. Carolyn Kuski is Associate Vice President for Economics and Policy at the Environmental Defense Fund. Outside of that, she's also Vice Chair of the California Climate Insurance Working Group. She joins us from Philadelphia. Carolyn, good to have you with us. The working group charged by the governor to, quote, explore innovative strategies that reduce the risk of climate-related threats. We certainly saw this play out this month in California. Carol and I have spent quite a bit of time over the last few weeks talking about the economic effect, not just on the insurance industry, but also, of course, on the way of life for many people who've been affected by these fires in Southern California. Have you been able, in your analysis, to put a number on this at this point?
I've seen several estimates of damage, and they keep getting higher. And of course, a lot of the estimates we're seeing are the direct property damage, but we know events like this cause a lot of non-property loss as well, right? Lost income and higher rents that people have to pay and so on, and it can really cascade through the economy. So these become incredibly costly.
What I'm wondering is, what's the future of the insurance industry in the state of California? And I think increasingly, areas that are being impacted over and over and over again by climate change, or new areas that never seem to see unpredictable weather that are now. So let's start with California. What's the future there when it comes to making sure that those that live in the state, have homes in the state, can be insured properly going forward?
Yeah, it's a very active question right now. We saw, going back to the 2017 and 2018 wildfires, which until the recent blazes were the two most destructive in the state's history. And that really started a period of destabilization in the insurance market in California, where we saw lots of carriers pulling back, either not issuing new policies or not renewing policies that they already had, particularly in the highest fire risk areas. And as the private sector pulled back, we saw lots of residents of the state having to get their insurance through the state's FAIR plan, through that state program to provide insurance for those who can't find it in the private market. In response to all these shifts, the California Department of Insurance has changed some regulations and made some updates that they hoped would keep insurers in the state, but now we'll have to see how they assess fire risk coming out of these blazes.
How do you see that affecting the way that people live and work in California? This is something that Carol and I have been asking quite a bit. I'm a Californian. My parents certainly are still on the Central Coast and think about fire risk all the time. Does it cause pricing to go down because of the difficulty in getting insurance? Do people move away because they can't get sufficient coverage? Do we see a fundamental shift in the world's 5th largest economy?
Yeah, we have some initial research evidence that as insurance prices go up or insurance availability goes down, that is capitalized into housing prices. So you see declining home values, and you see people taking that into account when deciding where to live and where they want to move. The cost of insurance can be a large part of the total cost of occupancy in a house. And I think we need to focus on the fact that insurance is more expensive and harder to get when the risk is really high. And so really the only long-term strategy out of that is how do we lower our risk? And if we can lower our risk, we can not only stabilize insurance markets, but we can keep people safer and lower the economic costs of these as well. And that starts a whole bunch of conversations that are really outside insurance, right? Questions about how we build and where we build and what our communities look like. But those are the conversations that the state's now starting to have.
All right, so cue sarcasm on my part. But Carolyn, since we're doing so well on reining in temperatures and the rising temperature of Earth, it sounds like we're going to have to lean on things like different building materials, maybe building in different spots. Like, I mean, tell me how you're in the thick of it, and we have been talking about climate change now for a long time, and yet here we are, and the expectations are that things just get even hotter, and so this is our new world order. So what will be the changes? Is it really how we build? I wonder if that's really first and foremost how we move forward, and what are your expectations around that? I'm also curious about the cost equation around that, and that once again, does that become problematic for homeowners?
Yeah, those are such good points and really important questions. And absolutely, we are now locked into an environment of increasing risk. And I think it's that fact that risk is continually growing. It's not plateauing at some new level. That's really hard for us to kind of wrap our minds around and to design our institutions for as well. So 2024 was the hottest year on record, but it may well be one of the coolest that your children experience. And I think that frame can kind of help us wrap our heads around what we're seeing. And that's going to turn into more frequent and more severe disasters. And so how we can protect ourselves from them really does become paramount. And when it comes to wildfire, there's actually a range of things. So we need to think about the structure itself and making the home safe. And then also, I'm sure lots of Californians have heard lots of talk about this, the defensible space, right around the home. And then it also, because fire spreads, it's not just what you do to your home, but it's what your neighbors do and your community as well. And then if we're talking about fires that are in the forest, which is different from what we just saw right in LA, we also have to think about forest management as well. So we really have to think about risk reduction at all these different scales and align them all. And some of these things can be done really cost effectively. They can pay for themselves and lower future damages. Some are a little bit more costly, and some are just behavior changes.
We only have 30 seconds left, but I want to jump in. Do you think we see fully rebuilt in Altadena, Pacific Palisades, and other areas that have been hurt so bad?
Yeah, I mean, communities want to come back, and I think it's a difficult time to have the conversation in the tragedy of post-disaster, but an important time to think about what they want the future of their community to be and how to improve their safety in light of these growing risks.
Yeah, a lot to consider here, the way forward and how to prevent certainly the impact. If the expectations are we continue to see a warming Earth and more fires and the extreme impact of climate change on those fires, got to figure it out. and how we survive better going forward. Dr. Caroline Kuski, she's Associate VP for Economics and Policy at the Environmental Defense Fund, right here on Business Week.
This is Bloomberg Business Week with Carol Massar and Tim Stenovac on Bloomberg Radio and Television.
All right, everybody, we are getting ready to wrap up on the Monday edition of Bloomberg Business Week. Carol Massar, Tim Stenovac live in our Bloomberg Interactive Broker studio. I know I've been doing this, I want to say like a million times today, where I go back and I'm like 1, 2, 3, 4, 5, 6, 7. 7 of the top 10 stories
in that last hour? Or
in the last 8 hours have to do with DeepSeek and AI and the trade today.
So there's interesting a couple real estate stories in the last hour that we'll hit on after we do
So
DeepSeek.
people are like moving on. They're like,
They're
okay,
moving on.
I've had a full day of
Yeah.
AI. All right, what do you got for
I
me?
want to do this triple levered NVIDIA traders one because you and I have talked about, and it's the most read story in the last hour.
We kind of teased some of this earlier, I feel like.
Yeah. Okay. As levered up, U.S. investors sustained eye-popping losses in tech stocks and related ETFs on Monday. They could take some comfort from the fact that another batch of speculative traders across the Atlantic had it even worse.
Yeah, amid a bruising global rout sparked by anxiety over the rise of China's DeepSeek AI model, the London-listed leveraged shares 3 times NVIDIA ETP slumped 52%, wiping out more than half of its $172 million in assets before trading was halted today.
Wow.
That eclipsed even twice levered U.S. single stock funds like Granite Shares 2 times long NVIDIA daily ETF, ticker is NVDL, which was on course to drop a record 36% as of Monday afternoon.
Why would trading on that be
NVD.
halted if it's designed to be triple levered?
I guess there's still rules, right?
I guess, but I mean,
Yeah.
You know what I
Granite
mean?
Shares 2 times long NVIDIA daily ETF was down almost 34% today.
Okay. All types of leverage products were caught in the global market rout caused by DeepSeek, which
It's a great question because, right, when you do that, you're going to
you
be
know what
exposed.
you're getting.
Yeah.
It's like 3x until it gets to a certain point where they're going to halt trading. I don't know.
Yeah.
I don't know. I'll have to look into it. We linked to the London Stock Exchange website, so I can go dig into that a little bit. According to our own team at Bloomberg Intelligence, the drop in the leverage shares 3x product underscores how concentration can cut both ways. It's been a good run, but sometimes you'll be subject to these idiosyncratic days. This is Athanasios Sarafagis over at Bloomberg Intelligence.
Okay, as we like to say, with every trade, there's a buyer and seller. So for investors who got the direction right today, that can pay off. The NVIDIA fund's bearish equivalent, which delivers 3 times the inverse of the stock's performance, was up 58%. It's a much smaller product. It started the day with less than $6 million in assets, but it'll be interesting to see if investors are chasing it.
This is the leverage shares negative 3x short NVIDIA ETP security.
Thank you for the specificity of what that is. Yeah.
In case you want to look at that one.
I
Wow.
mean,
Okay.
I get it, right?
Yeah. You want to talk real estate?
Yeah, you want. Okay, where you want to go?
Do you want to go to Gwyneth or Spitzer?
Ooh, oh.
Yeah, I know. There's 2 choices here.
Let's go.
Let's start with Gwyneth.
Okay.
So the Wall Street Journal reporting that Gwyneth Paltrow's longtime home in Los Angeles' Brentwood area.
This is like a pittance to the other story, but let's do it.
Which
go.
one?
Let's do Gwyneth.
Oh, okay.
Yeah.
Has sold for $22 million. The home was unharmed by fires. It came on the market for $29.99 million back in May of 2024. The price was lowered to $24.9 million in October. Paltrow and her ex-husband, Chris Martin, you might know him from the band Coldplay.
Heard of him.
Bought the house for $9.95 million back in 2012.
Yeah, located in the Mandeville Canyon area of Brentwood, known for its sprawling lots, tall hedges, and old-growth trees. The area was ultimately largely spared from the fires. So interesting to know that that has done okay. It's a single-story house, got renovated around 2009, 8,000 square feet, 6 bedrooms, includes a large kitchen with a wood-burning oven. There's also a 1-bedroom guest house with a wine cellar, office, gym room, and movie theater, which I would take as my home.
Yeah, that sounds good. How about this? Why is she selling it? Well, she built a new home in Montecito.
Well, she's moved on. She's
gotta
married.
go-
She's gotten married again.
Yeah, you got to go up to
Yeah.
Montecito, just
Yeah.
outside of Santa Barbara, go a little bit north of LA, and
Moving on.
yeah, get out of LA and go to Montecito.
Got to do this other story that's among
That was
the
the Wall
most
Street
read.
Journal, I should say.
Okay, another one that's among the most read on the Bloomberg in the past hour, and it's in the real estate area. Spitzer Enterprises. It's the real estate firm run by former New York Governor Eliot Spitzer and its partner are exploring a sale of a luxury apartment building overlooking Manhattan's Central Park. We're talking about 800 Fifth Avenue. Winter Properties is the name of the property. It could be worth as much as $1 billion, according to folks in the know.
Yeah, Newmark Group team led by Doug Harmon and Adam Spies are representing the owners in the sale. The people said asking not to be named, citing private information. It's being used for rentals right now.
Yeah.
But it's being marketed as a major development opportunity for investors who are seeking to turn the property into for-sale residences. A developer would have the ability to build roughly 350,000 square feet for residential use.
Yeah, I mean, listen, the Spitzers, long time been influential when it comes to New York real estate. We know that. Elliot Stead overseeing the property firm known for building luxury high-rises. Elliot has continued to work in the business, building towers in Brooklyn, also is seeking to redevelop a property at 985 Fifth Avenue into condos. So quite a
Investors have
portfolio.
been seeking sites to build more luxury housing in Manhattan. Earlier this month, the Soloviev Group,
Yeah.
the CEO of that firm we interviewed just a few
Yeah,
weeks
we
ago,
did.
they purchased an office building back on West 57th